Bernie, great to have you on. I realize you don't cover Walmart, but the fact that we are seeing this expansion in delivery, more focused on things like at-home grocery delivery with this news today, how does it speak to how this landscape is growing and evolving in general right now?
Yeah, so we think the grocery space for delivery is going to be of increasingly important. We saw a recent consumer survey where about 13% of respondents in the U.S. said that they order online delivery exclusively or often, and they expect that to go to 22% in just 2 years. So this is a $1 trillion TAM that's increasingly moving online. And we think DoorDash, Uber, both those companies are going after that opportunity, similar to what Walmart announced today, too. All these companies moving there tells you that this is happening now. And I think this is going to be a big story that we're talking about in 2022.
Yeah, Uber and DoorDash are two of those names that are really kind of trading like tech and other growth names right now, under quite a bit of pressure in recent trading sessions. Are these buying opportunities at these levels, or do they have further to fall?
No, we think so. And I think one of the things that investors are asking themselves, especially on Uber, is why will this year be different than other years? The stock certainly, the revenue multiple is certainly retraced, trading about 4 times now. It was high single digits last year. And I think one of the reasons why this flip over in the calendar is actually important for Uber is that as the year goes on, we're actually getting increased confidence in profitability in that ramp from them being EBITDA negative last year to break even. Now we're looking at positive EBITDA this year. Actually, if you value the company off 23 EBITDA for consensus expectations, it's only trading at about 30 times, and that's excluding their equity stakes. That's a real multiple you can put on the company. So, similar to Airbnb, the reason why Airbnb is supporting such a high revenue valuation right now, in the healthy double digits, is because they have 25% EBITDA margins. We don't expect Uber to get there anytime soon, but it shows that the market right now is rewarding the profitability angle, which we actually feel better about now for Uber now versus this time last year, and it's trading at a discount.
Do we know yet how Omicron is affecting these names, at least in the current quarter? Any kind of, high-frequency data that's signaling where we're at with that process?
Yeah, when Dara spoke at the competitors conference in the middle of December, he said that they had their best week ever during the pandemic. That was early days of Omicron, I think. So that's the best thing we have to go off of. But I would say that one of the takeaways that we expect from the pandemic, or one of the consumer surges that happened, was the increase in delivery, and we really think that's going to be sticky. We've done a variety of consumer surveys that's informing that decision from the consumer standpoint, but then also the products are getting better too. And by that, I mean more verticals. So alcohol, convenience, grocery is going to be added as well too. So I think that increasingly delivery is going to be moving to subscription. And I think DoorDash and Uber are both in really good positioning there.
One of the bear arguments we hear quite a bit is that the grocery business itself is so low margin that the idea they could sustain these fees longer term is vulnerable. I wonder, do you think that's valid?
Well, one of the, in that survey that I mentioned earlier, where 13% of consumers currently are doing grocery online, either exclusively or often, the main reason why they do it is because people don't have enough time. So I think time is something that, it's the same thing with delivery. Instead of ordering from DoorDash, you could go pick it up at the store yourself, but people willing to spend on that added convenience. And I think it's actually highlighted even more so in grocery, because you're not spending, an hour or however long it takes you to go grocery shopping. So I think that time saving is real. And then the other thing that we saw from that survey too is that only about 25 or 30% of respondents enjoy grocery shopping. So again, this is something where I think people are going to say, hey, they don't want to necessarily go out and waste their time doing it, and they're willing to pay for it.
Shepard Smith here. Thanks for watching CNBC on YouTube.